Freelancers, you are making these 5 tax filing mistakes every single year. That is why in this video, I am going to tell you what those 5 mistakes are, how to avoid them so that you can keep more money in your pocket, because that is really what it's all about. But before we jump in, I need you to like, comment, and subscribe so I can continue to keep you updated on all things business and tax. I love working with freelancers because you're out there really trying to hustle and make it happen for yourself. And I think that many times when you're doing that you literally lose sight of what it is that you're supposed to be doing from a regulation perspective to file your taxes properly because you're hustling trying to make your money. I get it. I want you to understand that one of the things that you gotta stop doing is mixing your personal and business funds together. And one way that you can do that is by having separate bank accounts. Have your personal bank account, have your business bank account. Because when you start to commingle funds and things get muddy, you are really creating a nightmare for yourself and a nightmare later on down the road when it comes time to file your taxes if you ever get audited. So you really need to have that complete separation and stop mixing personal funds with business funds. If you are, for example, operating a vehicle, and if that vehicle is predominantly a business vehicle, personal vehicle, it's okay to write it off through your business, but make sure you allocate out a separate amount to go on the personal side of the equation. But anything you want to be a business expense, it needs to come out of your business account. Record keeping. You have to keep good records. So I want to explain to you what it means to have really good records. Having just a bank account and all your expenses going through one bank account is not record keeping. That's a bank account. Record keeping means that you actually have some type of bookkeeping, accounting system set up. And many of you do not have that. You need to make sure that you are not only keeping track of all 12 months of your bank statements, all 12. You need to have all 12 months of your credit card statements. And that means add on, not or. I said, and you also need to make sure that you have all the receipts associated with the expenses that you have incurred. Because we are living in this automated world where everything is on auto pay, everything is Apple Pay, swipe this, Venmo me, Zelle me. I don't know what else is going on out there. I'm so sure there's some underground world money being transferred, but I want you to know IRS requires that all payments are documented properly, that you are keeping track of it and you have a valid receipt, because just having the actual payment is absolutely not enough. You have to have the documentation to support it. Estimated tax payments. When you are a freelancer, that means you are free. You're on your own. You no longer have an employer telling you what to do. You want to be in charge of you. You want to be in charge of your money, in charge of your time, where you're also in charge of making sure you pay your taxes. And when it comes to being a freelancer, IRS is not playing with you. This is what's required of you. If you are a freelancer, you have to make estimated tax payments quarterly. What does that mean, Carla? Estimated tax payment, huh? What are you talking about? Let me back up a little bit. When you are working for an employer and you are getting a paycheck every 2 weeks, your employer was doing you a big favor. They were withholding out of your paycheck your federal income tax, your state income tax, your Social Security tax, your Medicare tax. Well, guess what? You want to be a freelancer. You want to be in charge of yourself. You are now required to pay your own taxes. And the law states you have to make your quarterly estimated tax payments 4 times a year. You have to make your tax payments April 15th for the current year, June 15th. I know it's not exactly 3 months later, but it's April 15th, June 15th, September 15th, and then January 15th of the next year. So right now, if you are thinking about your estimated tax payments, you should have already perhaps made your April payment. You should perhaps already made your June payment, depending on where you are in the year. You need to pay again in September. You got to pay again January the following year. And in order to pay, you got to know how much money you're making, right? You got to know what your net profit is. That is why having good records is going to allow for you to make your estimated tax payments. Many of you freelancers are not taking the deductions that you're supposed to be taking. You know why? Because you don't really understand what's an actual deduction. I have freelancers saying to me, Carla, I purchased a car. Can I write off my whole car? Probably not. There's ways to do write-offs for vehicles that you have to totally understand. You want to make sure that you get some education around what your deductions are. If you are a freelancer, you're still a business owner. It doesn't matter that you think in your mind it's a side gig, it's a side hustle, it's not my main income. It doesn't matter whether it's your main income or not. The fact that you are making money as a freelancer and someone is paying you on a 1099, whether they give you a 1099 or not, you are a business owner. Even if you are just thinking in your mind, you are a freelancer. Business owners you are actually not required to write off your business expenses. The law doesn't say you have to write off your business expenses. The law says you are allowed to write off your business expenses, but you want to write off your business expenses because you want to take your income down lower so that you can mitigate tax. And here's the other thing. What if you're a freelancer and your business took a loss? Do you write off those expenses? Do you take that loss? Absolutely you do, because you want to make sure that if you have any other income on your tax return, that loss is able to flow over and mitigate the other income that is on your tax return. So I need my freelancers to stop thinking about being a freelancer and think about you are a business owner, and business owners should take all the expenses that they are entitled to take. Freelancers, I need you to understand that many of you are going to be filing your tax returns as a sole proprietor. A sole proprietor means that I am a business owner. I'm not formal. I haven't gone out and set up an LLC. I haven't gone out and established an S corporation. So you are filing as a sole proprietor. But here's something that you probably don't know. If you are filing as a sole proprietor, that is probably the worst filing status for you if you are making money. If you are filing as a sole proprietor, that means that any net profit is going to be subject to self-employment tax, not just income tax. Remember, you are a freelancer now. You have to pay your own income tax, federal and state, but you also have to pay your own Social Security and Medicare tax. So that means if you're making money, and let's say your first year, you're fortunate, you made $100,000, you're going to pay income tax on that 100, state and federal, and you're going to pay Social Security tax on that 100 at 15.3%. That is going to be a big amount of tax you're going to have to pay. That's why I recommend, as a freelancer, you need to consider whether you should move to another type of entity, perhaps an LLC, perhaps an S corporation, so that you can minimize your taxation. Free means that you're on your own, you're making your own money, but free also means you got to be responsible. And now that you know better, you got to do better. That is why you can no longer commingle funds. You got to separate personal from business. You got to keep good records. You got to start doing your estimated tax payments 4 times a year. You got to make sure you're getting all your deductions in there. And you got to ask yourself, should I be a sole proprietor? Or should I flip it around and be something different so I can minimize tax? And now that you know better, you're going to do better. That is why you're going to you're going to comment, and you are going to subscribe, because I need to keep you updated on all things business and tax so you can remain free.